Good evening and welcome to my midweek recap here for the S&P 500 and plan ahead for Thursday and Friday. Real quick here, I do have the plan I was looking at for Tuesday. Initially was looking at calls at this yellow line for the 21 EMA. I was also looking at 270 puts on this breakdown. Now I did end up taking the 270 calls once it looked like they were showing support. Long wick indicated there were some buyers. Very tight stop loss. Got in at 290, trailed me out at 275. It's no excuse, but I was away from my screen at the time when this did break down, and those 270 puts would have paid tremendously well as it would over a $2 drop from that point, and it would have been nice to be able to catch that, but such is the case, and just was not available. So, anyways, price action did come down, found support initially here around 268, bounced up into a dead cat bounce where I did consider taking some puts on that move, but this was a very long bar to trade against, and the risk reward was not there for me. So I simply waited. Plus, there was the 50 SMA way down here below price, so didn't really see too much meat left in that move. Didn't want to gamble with it, so I just waited. Towards the end of the day, it looked like there was something on the tape holding price from dropping down, so I did take these 15 June 268 calls here at 336. Very nice gap up here on Wednesday. Took half those off at 458. Now, anytime price action gaps above or below a significant level, it's best to sit and wait and see what happens. In this case, for the S&P 500, if you would have waited the first four 15-minute bars, which is a total of 1 hour, sure, you would have missed out on $1 of the price action movement, but it's a huge move up, another $2 plus above that level. Had it broken below, probably would have done the same and come all the way back down here to this 269 and close the gap. So gaps above or below significant levels, make a note of them, learn from them. They are very profitable when they do happen. Even yesterday, as you can see, you had 1, 2, 3, 4, 5, basically an hour and a half to 2 hours to wait, and you still had the opportunity for a $2 move. So gaps are very profitable. Sometimes you go with them, sometimes you go against them. Just have to wait and see. Anyways, price action came up to the 8 EMA, which is this blue line. Looked like it was going to stall out and roll over. I did take another quarter off there at 524. I'm holding the last lot of these calls for a potential move higher. I want to see it come all the way up to this 274, but market doesn't care what I want. It's going to do whatever it does. But that is my goal for these 268s. At that point, I will most likely close them out for the gain that's there. If it breaks below this blue line, the 8 EMA, I will again close them out, take what's left up on the profits, and look for a move back down here, this 21 EMA for some 270 calls approximately 2 weeks out in the future. If price action does roll down and start to come down even further, fill this gap maybe, I'm looking for a test of this 50 SMA for some 268 calls approximately 2 weeks out, and below there is the 200 SMA for 265 calls, again about 2 weeks out in the future. Now above, I will take a breakout trade. If it moves above this 274 level, I will look for 275 calls approximately 2 weeks in the future for a move up to this range here between 278 and 290. That's simply the previous highs over here for a test of that to complete this W and maybe even start to climb up to this overall measure move price target. Now, in the trade crew chat room, I was mentioning that if price action closed below 270 yesterday, it may have voided out this W pattern. But looking at this as a potential false breakdown or a trap trade, as I like to call them, bears got trapped. They took the breakdown, rode it down as far as they could, pressed and pressed and pressed. Market makers saw all their stops up here looking nice and juicy, went up, ran straight through them, and we had a very nice move today. And towards the end of the day, it looks like they tried to go ahead and start pressing again. So may have to restart the process. There may be another gap up. Ultimately, we just have to wait and see what does happen. But for now, I'm going to remain bullish. Price action still above the 8 EMA, the 21 EMA, 50 SMA, and the 200 SMA. So in my opinion, there's no reason to be short the S&P 500 unless it is for a quick trade. This will be my trade plan for the S&P 500. If you have any questions, comments, concerns, please feel free to leave them down below. You're always welcome to come and join us at the Trade Crew chat room. It is a free chat. Have a good evening and good luck.